My congratulations when it comes to this very robust set of numbers. You are fairly positive when it comes to the outlook for China, but as Rich just mentioned, regulators there can still move the market very easily. What would happen to your business if there was a cap to be put on prices there?
Well, so thanks, Heidi, for the comments around the results. It was a very strong set of results. So we've had a great half operationally, particularly in our flagship Western Australian iron ore business, and that, coupled with high commodity prices, has allowed us to deliver this record set of first half earnings and record first half dividend. Now, in terms of the commodity price outlook, we do, as we said this morning, expect that we've got another billion-ton plus year ahead of us for Chinese steel production. That's off the back of some of the positive signs that we're seeing in terms of underlying growth indicators in China. Now, what we're seeing play through in terms of very near-term dynamics on iron ore pricing is regulators up there stepping in to make sure that activity is properly playing out, in particular with that focus on speculative activity there. But at the end of the day, iron ore price will be determined by supply and demand. Given the strong outlook that we see for the demand side of the equation, given steel production in China, plus some of the supply side constraints, we do think that that's going to provide a measure of support to pricing. And of course, we're very well positioned in that regard because we sit at the low end of the cost curve. We've developed a better product suite in terms of quality with more lump and higher iron content coming out of a recent project that we've developed called South Flank. So that combination of operational stability, good outlook for iron ore demand and pricing bodes well for the business over the remainder of this year.
What is a bigger and more impactful theme for you? The fact that the property market is slowing in China, or the fact that we're also expecting more infrastructure spend?
Well, so I would say that specifically in respect to the property market, yes, there's been some slowdown, but we've also seen an easing of policy as of late relative to some of the expectations that perhaps existed in the last half. So we're seeing the recent easing of policy as being a net positive. That combined with, as China moves into the new 5-year plan, some expectation around the focus on economic stability, growth, and of course some potential for more infrastructure spend, I think bodes well overall for the economic outlook in China. But what we're calling for in terms of steel production or steel demand over the course of this year is really just matching what was there the year prior and for the last few years. But we think that in itself is a positive.
Speaking of spending, of course, it was the outsized dividend that was a nice surprise for shareholders. How are you balancing that return of value with reinvesting back in the business? Do we expect a special dividend to be possible?
Well, so the dividend that we declared today is well above our minimum payout ratio of 50%. So it is good returns. And in fact, we've returned $22 billion to shareholders over the past 18 months, so more than $1 billion per month. But at the same time, we're continuing to reinvest in the business. So we've brought a couple of projects on in the past year. That includes South Flank in iron ore and the Spence growth project across in copper in Chile. And we sanctioned the first phase of the Jansen development in potash in Canada. So there is capital being reinvested in the business, both to sustain the business, to improve it and to grow. But at the same time, given the strong underlying operational performance and strong markets that we've experienced, that's allowed us to generate significant returns to shareholders in the form of dividends or a payout ratio above the 50% minimum.
And in fact, you have been trying to spend more and pick up more future-facing commodity assets like nickel. You were outbid when it came to the Canadian assets by Twiggy Forrest. Is that an indication of how expensive things are? How easy is it to pick up these good assets at a reasonable price?
Well, the reasonable price is the key phrase there. What you saw play out in Canada was discipline. And specifically the disciplined application of our capital allocation framework. Now, we do that against the backdrop of also having the opportunity to develop more growth in nickel and copper out of the resources that we already have as one of the world's largest holders of copper resources and nickel sulfide resources already. We've also upped our activity in exploration. So we've entered into a number of exploration partnerships. We have drills on the ground in a number of locations around the world. And we've entered into a few early stage entry options, the most recent one being another nickel play, this one in Tanzania, where we've taken an initial investment in a resource called Kabanga, the world's best undeveloped but soon to be developed nickel sulfide deposit. So quite a number of levers available to us at all times, strict application of our capital allocation framework, and we'll be disciplined about the options we pursue.
What do you see as the super cycle for battery metals, right? Is it 3 to 5 years, and how does that inform the way that you invest?
Well, so the we are forecasting quite significant uptick in demand for certain commodities like copper and nickel, not just because of batteries in the case of nickel, but because of the broader focus on renewable energy. So we're forecasting over the next 30 years 4 times as much nickel demand as there was over the past 30, for example, and 2 times as much copper. We believe we're well positioned to grow into both those markets. We do have growth ahead of us over the next 5 years in copper, for example, where we're expecting about another 300,000 tons per annum growth by the end, or production by the end of that period, because of improvement in grade at Escondida, our big flagship operation in Chile, the Spence growth project that we've recently completed. But we're looking for further growth, and we have opportunities to do that internal off the back of the resources that we already have, and we'll look to external options as well. Same thing applies in nickel. We're looking at opportunities to grow our Nickel West operation, but we're also out there exploring for more and entering into commercial partnerships that will give us more on the 5+ year horizon.
You've called for the WA border to be reopened. How well placed is BHP to deal with an expected spike in COVID cases if that happens?
So I don't want to say it'll be easy. Of course, there'll be challenges that come with that. But we've had 2 years now of learning around the world as we've needed to contend with higher rates of COVID. Chile being a prime example of that, where for a period of time there was 30% absenteeism as a result of COVID. So we've learned about what measures need to be put in place to guard against those impacts. We've learned how to protect people. And it would be no different in WA. And of course, because of the good job the government's done over the past couple of years in seeing the state through the worst of COVID, any opening up now will occur against a backdrop of people, there being a high rate of vaccination there already, and where companies and governments have learned how to better manage COVID. So we think that now it's certainly a more manageable prospect than it would have been previously. But now is the time to move in that direction. And we certainly feel prepared in terms of the measures that we have in place and the learnings that we've been able to take from other regions.
We've seen exploration spending, capital raising all hit record highs at the end of last year. Is this the start of a new boom, mining boom in Australia?
Look, I certainly think there's more opportunity here in Australia, and we have seen an uptick in project activity, but still well off its peaks of the last cycle. So I think what you're seeing certainly come through for a company like BHP is a very strong focus on discipline, and that means discipline in terms of the opportunities to get pursued, but also when in pursuing them, that strong focus on doing them as efficiently as possible. And you saw that come through with the South Flank project, where we brought it in on time and on budget, in spite of finding ourselves in a COVID-disrupted and inflationary environment. And I don't know that would have been the case in previous cycles, and I expect that will continue.
Rio Tinto's recent workplace report was deeply disturbing. Do you think BHP needs a similar internal review?
Well, so on this, what I would say is that those sort of unacceptable behaviours occur in companies, and BHP's no exception. But we've been calling that out and have recognized that for quite a number of years now. So in 2016, we established a goal of becoming a gender-balanced company, or having a gender-balanced workforce by 2025. And we've made significant strides since then. So we crossed the 30% mark, in fact, this past half, where over 30% of our workforce is now female. And we've got further to go. But we we have further to go, both in terms of increasing the proportion of the workforce, but also in eliminating some of those behaviours. We did report into the Western Australian inquiry into sexual harassment in the mining industry last year. We were very transparent there around some of the challenges that we faced on this front and the actions that we're taking around it. That included an internal review back in 2018 that underpinned board-level discussions at BHP into exactly this sort of behaviour. Off the back of that sprung a respectful behaviours campaign that was started then. It's continued on since. We've established internal bodies to deal with investigations, an independent investigations unit, and an independent support unit was established last year. So many of the recommendations that we've seen come through in the Rio report are addressed by actions that we've taken or have underway. But of course, we'll look for opportunities for improvement because, as we've said previously publicly, we know we have further to go. We're taking strong action to back that up, and we'll continue to report publicly on this, including through our annual reporting suite, where we do release details on cases and the actions that we have underway.
Mike, not just the labour force, but of course these ongoing global supply chain issues. Have you seen a lot of disruption operationally for your business, and how do you anticipate that's going to play out for the rest of the year?
So there has, things have been tight at times, but because of the purchasing power that BHP has, the way that we've set ourselves up commercially, and the very strong relationships that we have both with customers and suppliers, we've been able to see through the worst of those disruptions. Again, it's another challenge on top of COVID and so on, but one that we've been effective in navigating so far. Now, we do expect that some of the supply chain issues that are out there will persist for some time, including on things like transport, particularly container transport. But certainly nothing that we haven't been able to manage effectively so far.